The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the December 22nd, the terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. And let's make sure we have an extraordinary one. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what these bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know I'm absolutely grateful for your presence here. But even more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in. We'd love to hear from you at 877-927-6648. Now, if you'd like to call in, but you can't, you can always send me an email. For that, you send that to Steve at TFNN.com. And inside that subject heading, please put radio show question. Of course, if you're inside the Tigers, then well, any and every ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got all the U.S. indices trading at the downside. Dow's off 440 points. That's 1 3/10%. 1 7/10 for the S&P, or 70 points. 2 7/10% for the NASDAQ. That's 310 points. 1.8% for the Russell. 32 points. Nearly 5% for the semis. 119 points. Trannies are off 1.5%, or $190 out there. Gold is off $22. Silver's down 37 cents. Light sweet crude is off 38 pennies. Natural gas down 8 cents. 30-year Treasury up 16 ticks. Trade out at 128.21. U.S. dollar index is up 243 pips, trading out at 104.09. I do have a 10-minute delay on that chart. Leading the charge, dollar-wise, to the upside, you've got Madrigal Pharmaceuticals up about $10, a little over 3%. AXS, Tesla, Bear, that's a ETF. I'm not going to deal with that. What else do we got? McKesson Corp is up $4. FedEx is up $4. It's about 2.5%. To the downside, it's Lam Research. LRCX up $41, nearly 10%. That's a stinger. Mercado Libre down about 3%, or $26. Azimil Holdings down $24, 4%. Monolithic Power Systems 6% to the downside, $22. KLA Corp down $21, or 5%. BlackRock off $16, 4% to the downside. So we definitely have some shakers out there. But the question is, what are the markets doing, right? So let's go take a look at the dance steps. You know, it's the thing is that you got to feel the beat. And the cool thing is that actually the markets do have a beat, a heartbeat. But that heartbeat goes like this. When we take a look at consecutive, this is the ES Mini, March contract for the ES Mini, coming off of the lows here from October the 13th. And the black digits, those are on the top of candles versus the red digits at the bottom of candles. What those numbers are doing is they are identifying consecutive closes where each close is either above the prior close, black numbers, or where the prior close, where you have consecutive closes below the prior close. Not the low, just close to close out there. What we can see here is there's interesting dance steps that actually unfold. So what are those dance steps? Well, if we take a look at this, take a look at the retracements out here. Coming off of that October low, we've had 1, 2, 3, 4 two-day knee-jerk reaction pullbacks, 1 3-bar knee-jerk reaction pullback, and 2 4 knee-jerk reaction pullbacks out there. And then we take a look at those bounces. They have not exceeded 3 trading sessions except one time. That's coming off of that low. And you can twice. I take that back. 2 different times. We had 3 consecutive closes. That was on October 25th. That was and then we saw a pullback out there. You saw a 2-day basically, and then you had out here you had a 3-day back on November 18th. Otherwise, each of those moves higher have been 2 bars. What was yesterday? Yesterday was 2 bar. It was a 2 consecutive bar move to the upside. So not unusual to see the market pulling back. Now, the problem here for the ES Mini would be if it closes below 38.41 today. 38.41 is the bottom of its bullish structured profile out there. So that's really going to be the level to watch. Does it matter at 11.11? Yeah, sort of, but not so much. It's going to matter this evening at 5 o'clock. When the futures settle out there. So you'll want to watch 38.41. If price closes below that, really, I guess the level to truly be watching would be the low from 2 days ago. So you got the profile as one area, and then you've got 38.0350. If it's a close below 38.0350, well, we're more likely to get at least a 2-day, but I say 2 to 4 or 5-day pullback in the ES Mini. And more importantly, you would generate an A to B equals CD to the downside. And this pattern is similar. If we take a look at the Dow out here, we'll put up the Dow's contract. I'm not going to have all the lines drawn in there, but you'll see the 2-day knee-jerk reactions, both to the upside and to the downside out here. So it's not unusual to expect or see or anticipate that the market is pulling back. Now, in the case of the Dow out there, and I did see a question inside the Tiger's Den, what's the chances of the Dow bouncing tomorrow? Well, first thing, I pay attention to that ES Mini and where it closes. So we took a look at those numbers. For the Dow out here, its number is at 32,940. 32,940 is the bottom of its bullish structured daily profile out there. If price were to close below that, that would be a bearish message. And I would say tomorrow would more likely be a move to the downside. And tomorrow may more likely be a move to the downside anyways, just simply trying to squeeze in at least that 2-bar knee-jerk reaction type move out there. So what we're seeing that's taking place, the point is, we're seeing that's taking place in the market is to be expected. Of course, it doesn't help that you've got that U.S. dollar index moving to the upside out there. And the U.S. dollar index, it's got that completed here. We'll just simply expand out this screen, make sure I'm in the right spot. I am. And so here we'll take a look at the March contract. We can see the A to B equals CD pattern. We can see that key reversal bullish engulfing candle that formed on December 15th. And now you can see that new profile that's out there. Let's get rid of the A to B equals CD pattern. You don't necessarily need that right now. So what the U.S. dollar index has not done here, and this is really critical, or I believe it's critical. So we know that right now, then eventually this correlation, this directional correlation between the U.S. dollar and the U.S. equity markets is going to disappear. But right now, that's not the pattern that's in play out here. What we can see with regard to taking a look at this U.S. dollar index chart, what makes it so important is that the markets, people are out there, I get emails fairly often about folks that say that the market's just going to crash, and maybe it is, but here's the deal. It ain't going to crash unless the U.S. dollar index gets above the top of its daily profile out there. And that's a bear structure daily profile. And if price can close above 104.67 out there, well, then what we should see is further significant downside moves inside of the equity market out here. What we can see is that the top of the profiles have held ever since they formed out here back in the late October. October 31st was when the last profile that formed out there where price found resistance at that top. There have been other profiles that have formed since then. Again, nothing is closed above the top of that profile. So before you start wetting your whistle, thinking these markets are going to just really careen to the downside, you need a U.S. dollar index that closes above 104.67. We'll be right back.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's down 452, S&P's off 69. Let's go take a look at our first request, the only request that we have at this moment in time, and that is from ELO2 inside the Tiger's Den. And ELO2 wants to take a look at N-phase energy. I'm hoping this is posted in the right spot. Yeah, I think that it is. So ENPH is the ticker symbol. So what we know about it right now is that it is trading below the bottom of its daily profile, bullish structured profile. It's been down there before, down below that, but it's not a bullish sign. And this could be set up an A to B equals CD to the downside. It would do that if price can close below yesterday's low. So the level to be watching today, tomorrow, the next day, or what have you, is going to be that 290.06. If you see it close below 290.06, what it would then be signaling to you is an A to B equals CD to the downside. And that pattern would look something like this. Now, we don't have a confirmation of that, just preparing you for what to be looking for, depending on how N-phase energy here operates. So that's one pattern that's out there. If I look at and that's in the daily time frame. If I look on the weekly chart, you have a confirmed wave number 7, that's letter G. You have a excuse me. You have a Rhodes momentum indicator top on the weekly time frame chart. That was confirmed with this key reversal bar the week of December 9th. But what price has done here, so this is going to be important for you to watch. What price has done so far this week and it's tested it yesterday, was the bottom of its bullish structured weekly profile. So that says that 291.47 level ELO is a real key area for you to watch. But you've got a confirmed top. You've got price that's tested support. That's all that it really needs to do. But if it closes below support, it tells you, hey, you've got something else that's going on here. Now, the month obviously not ended just yet, but if it did end today, you would have a bar number 8 of a TD9 count, but more importantly, you would have a confirmed Rhodes momentum indicator top. But just as important as that would be, price is still above the top of its monthly profile and above its green oscillator and change line, which is 283 and change out there. And so therefore, it would have a neutral signal. So the weekly has a confirmed top, but support is held. That makes the most important level, I think, for you to watch is going to be that 291.47. So I hope that helps you out. Last thing that I can do out here for you, ELO, is take a look at more of a micro look at the end phase, ENPH out here. And we do that by just simply taking a look at the 30-minute time frame chart. The 30-minute time frame chart turns out that at 4 o'clock yesterday afternoon, it completed a TD9 count top. And now what price is doing? Price is targeting its TD9 count breakout level. And that's at the 299.54 level. That should be support. If it's not support and price breaks through that, well, then that really brings open that weekly chart that we looked at to watch for that 291.47 level out there. So I hope that helps you out. Thanks so much for the request, ELO, and happy holidays to you and your family. Let me see if I can get back to that area of the den. Why have I? Here we go. See if there's any other requests out there. So I don't see... nope, just that. Okay, and I've got nothing by email. So now let's do this here. Let's actually go and take a look at what's going on inside the equity futures. So let's take a look at the ES Mini. So at the ES Mini, we know that it's trading below the bottom of its profile at this moment in time. And again, that key level to be watching there is going to be 38.41. We're at 38.33 right now. We can see that consolidation pattern, the breakdown of the consolidation pattern. So that is still in play. That gets us towards that 37.50-ish range out there. And then, of course, down below that, you've got your TD9 count breakout area. The TD9 count breakout area is at 36.21, even Steven out there. Well, if we take a look at the 5-hour time frame chart out here, this did top with a TD9 count. Price is below its profile level, so it's targeting 38.22.25. That's the TD9 count breakout level. The 240-minute chart, which also had a TD9 count top, that has targeted its 38.22.25 level. You can see on the 2-hour time frame chart, a TD9 count for the ES Mini crashed through the first TD9 count breakout level at 38.62, and now it's off to the next one. Well, if you just take a look at that top row, the 5-hour, the 4-hour, and the 2-hour, 38.22.25 happens to be a TD9 count breakout level for each of those. Therefore, 38.22.25, one tick, is going to be the real key level for us to observe today. If price closes below that, that's suggesting lower price, and that in fact could set up an A to B equals CD to the downside for the ES Mini. As we look to the other intraday time frame charts, a 60-minute no bottom signal, the 30-minute does have a wave number 7 signal. Now that needs a higher low to confirm that pattern. So something to watch there. If that is a bottoming pattern, if it does confirm, if it does take hold, then you should see a rise up towards that 38.67 area. Don't have any good news on a 15-minute time frame chart. The 10-minute chart is forming a TD9 count bottom. That'll complete here in another 7 minutes. And that suggests that we should see a move to 38.39. That would be the next upside battleground for a 10-minute chart. Above that, 38.48. And then above that, we'd be looking at 38.57.50 out there. So that's what's going on. We take a look at the ES Mini. If we're going to summarize these charts here, the real key level to be watching on the ES is going to be that 38.22.25 level. And then the second area to be watching, this will be the end of day level, is 38.41. Mr. Bill writes inside the Tigers Den. He says, Steve, thoughts on the semiconductor SOXX medium term? So let's go take a look at SOXX. If you give me a moment, we'll get that going. SOX, is that a triple or something, SOXX? I don't think that it is. So let's go take a look at SOXX. Let's get that on this 3-panel chart out here. Give me a moment. Sorry about that. SOXX. And the question was, thoughts on XOXX from a medium-term direction standpoint. So from that, for that purpose, what we would do here, Mr. Bill, is we'll start with the weekly chart, if that's okay with you. And as we take a look at the weekly chart, this week here has formed a new week daily profile on a weekly chart. How about a new weekly profile on a weekly chart? And it's bullish in structure. Turns out, though, that price is trading below the bottom, which is at 354.21, and the center, which is 363.16, and the top, which was yesterday's high, at 398.94. So now what we see is price is trading below. It's potentially lost a level of support. That's that weekly profile area. Daily could be setting up an A to B equals CD to the downside. So we'll take a look at that. But right now, a key area of support is there an area that you'll be watching on that intermediate term time frame, Mr. Bill? And that's that red oscillator change line at 344.59. The price closes below the red oscillator and change line. There won't be any other levels of support for the SOXX on a weekly basis other than it would be signaling to you and I that price is going to go ahead and try to make its way back to the TD9 count bottom, bar number 8, that probably October 13th, but let me see, the week of October, yeah, that was the week of October, the 21st is when that pattern actually confirmed. Okay, so that's what's going on with the stocks out here. Quickly look at the 30-minute time frame, and then we're going to switch over to the other set of charting tools to draw that potential A to B equals CD. We don't see any kind of bottom signal here on a 30-minute chart, so it does appear that the semis want to head lower. Now, a price target on the daily time frame is going to be this 321.27 level out there. In fact, I'll just use this for right now. When I say this, I'm just going to draw on the A to B line. And then we're going to take that and apply that to where the C point would be. Let's see where this falls. And that actually would take us down just below the TD9 count breakout level. So it does appear that price is going to go target at 317, 321-ish area, Mr. Bill. Watch that weekly oscillator and change line. That will be the last trigger to confirm. Steve Rhodes with TFNN. We'll be right back.
If you want to take advantage of the sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. So G-Man inside the Tiger's Den is considering taking a short position inside of Amazon. And those are the charts that we have up on our screen right now. AMZN, what G-Man writes in, he says, Steve, if you can take a look at Amazon for a short here, I'd short it if it rejects the 84 area, which it is at right now. So as we take a look at prices trading out at 83.87. So on these charts here, you've got a Rhodes Momentum Indicator signal that has been triggered. Now, what price needs to do today, so this actually yesterday confirmed a Rhodes Momentum Indicator bottom. That was because it generated a three-river morning star. Just trying to expand this out, maybe make it a little bit easier for you to see. So that's a three-candle pattern out there. And if price closes below the low from 2 days ago, that's the low of the pattern, 84.33. That would actually negate that signal. Now, you can see that price is still stretched, so it has generating another Rhodes Momentum Indicator signal. And what you'd have to be aware of there is look out for a bullish reversal candle, because that would then confirm that pattern as well. However, a new profile formed yesterday, G-Man, and that was a slightly bullish structured profile. Price is trading below the bottom. That's at 85.52. So that's another area for you to watch at day's end. 85.52. A close below that would not be good news. But more importantly, though, it's that close below the candle session from a couple of days ago, 84.33. That would be the real negative. Would be the real negative out here. Now, as we take a look at this daily time frame chart, the more ideal place to short from is from the top of a profile out there, just to put that at your back. You don't have that right now. We're below the bottom of a profile. If we take a look at the weekly time frame chart, you can see we are in wave number 7, letter G. That couldn't be confirmed until next week. That needs a higher low to confirm that pattern. Rhodes Momentum Indicator signal has been triggered. That needs a bullish reversal candle. We're below profile levels. We are below the red oscillator and change line. Those are both bearish conditions. And there's an A to B equals CD to the downside. That's already been confirmed inside of Amazon. And that pattern looks like this. The A to B point is what I'm going to go ahead and draw in here. And that's going to be all the way from this Rhodes Momentum Indicator top all the way down. And we're going to take it all the way down here to the trading session of May 27th. And now we're just simply going to take this and go to where that C point is at. And then we're going to squeeze the chart and pull this back just a tad. And so the price objective, the one-to-one price objective, and by the way, this B point was passed with volume. The one-to-one price objective out there is 59.18. Price, you can see that price is, I've just maintained that same angle. See how price is on the strong side, the left-hand side here, G-Man? So that's more of it's a stronger move on this C to D leg than it was on the A to B leg at this stage here. So that supports the idea of trying to take a short position inside of Amazon. The question is when? When do you take that short position out here? And on a monthly basis, price is headed back towards 81.30. Now that is an important area, even though there's not a bottoming pattern here. And by the way, the weekly passed the B point with volume. The monthly did not. What does that mean? It just means the weekly did, the monthly did not. What we could also see about the monthly chart is price is headed towards a potential support level of 81.30. Again, no bottom pattern here, but you don't have to have a bottom pattern necessarily. Sometimes the bottom is just getting back to that breakout level. So those are the parameters. Those are the chart messages. Those are where the battlegrounds are at, for you to consider that short position out here. I don't have anything really on a 30-minute chart to help us out. Here this would suggest that maybe selling from the top of a profile would be cool. But look, the charts here support your inclination, which is to take a short position. The problem is do you jump on this train here, or do you do you jump on the train or not? Maybe some of that could be answered by understanding what's going on inside the NQ out there. So you and I, we had taken apart the ES Mini. Why don't we go do the same thing with regard to the NQ and see what its messages are out there? So I think that should be one factor that might impact at least the win to your decision. So let's go ahead and get those up here. Get this up here. See what we can see. And what we see is that we see is it's taking its sweet time to populate these charts out there. Stevie's not happy with that, but it is what it is. So you can see the consolidation measured move that we have out here inside the NQ, and that really tells me that the NQ is likely going to go target that swing point from October 13th. I need to pull back further. Yeah. So it's the October swing point out there. That's what it seems like it wants to do. What we're going to do after we take a look at these charts here, G-Man, is go take a look at the index ETF for the Qs out there and just try to get a feel for what's going on volume-wise. On a 5-hour time frame chart, you're below support, which was at 11,066. Needs a bullish reversal candle to confirm a bottom. Same with the 240. Same with the 120. So we can see the NASDAQ out here looks a lot worse than the ES Mini, right? I think on those three charts, 5-hour, 4-hour, 2-hour price was heading back to a breakout area. Here we can see that price has broken through those breakout levels. I'd watch the 60-minute time frame chart. 60-minute time frame chart here has a TD9 count bottom. If price closes below that low, by the way, is 10,998.50, then maybe that supports your idea of just jumping in, holding your nose, plugging in, and jumping in on the deep end. But if that level holds here, what it could be signaling to us, Jimmy, our G-Man, I apologize, is some type of bounce. That could be a large bounce, one that takes you up to the 11,220 area. And then that might be the area where you would go ahead and sell Amazon. I'm just taking a look at the NQ and Amazon, which is one of the top weighted stocks inside there. Just trying to put it together that way. The 30-minute says I don't have a bottom pattern out here. I'm not going to worry about the 15 and the 10-minute charts out there. So did this help us? I think how this helped us here, G-Man, is watching that 60-minute time frame. And so I would watch another 24 minutes from now. The question is, does the NQ close below 10,998.50? If it does not, I'd be just a little bit cautious. Just a little bit cautious out there. At least that's how I take a look at it. Now let's go switch charts here. Screens, I should say, and charts. And let's go take a look at the index ETFs just to try to get a feel for what's going on from a volume standpoint, although we are in holiday trading, right? I mean, a lot of people have already taken off or are getting ready to take off. But specifically with regard to the QQQ series ETF, it is testing the Qs themselves here, G-Man. They are testing the bottom of their weekly profile, which is 265.62. Now, that matters more on Friday at 4 o'clock than it does at 11:37 in the morning on a Thursday, but price is holding a key area of support out there. Volume-wise today, you are at 18 million shares, and that's going into 112 million shares. So I don't care how we slice and dice it. This is moving back with lighter volume. Not necessarily what you want to see out there is that light volume because we're in holiday trading. Well, it could be out there. But on a weekly basis, with regard to the Qs, you're holding a key area of support out there. So watch that too. And you are pulling back with lighter volume. With regard to, I don't know what else I can look at for you to help you out. So I hope that didn't confuse you. If I'm going to summarize it, it's more so not with regard to what the Amazon is doing. That's kind of impacting that decision. What's going on inside the NQs as price is pulling back to a level of support. Because longer term, assuming that Amazon is able to crush 81.30, if that is the case, then that A to B equals C to the downside will certainly complete or should complete. And then we're talking about a move to 59.80. You could even get a move down to the 35.40 level. So I hope that helps you out. Oh, I see. So thanks, Steve. You had shorted it from 91. It does still look weak. I'll wait. I'll tell you. Great, perfect. All right, folks, we're going to go to a break, but of course, I'd love to hear from you as well. No questions in the queue that I see at this moment in time. So you can reach out to me at steve@tfnn.com. And of course, if you're in the Tiger's Den, well, any and every ping will do.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. Let's go to our next question out here. This one coming in from Ron E. Ron writes in, let me turn this here sideways and expand this out. Read this text. Says, good morning, Steve. You're such a trooper to be doing your show, even though what has seemed from here like a very nasty illness. It definitely is. I was back at the doctor's this morning. So we'll just say Stevie is not 100%, not even close to 100%. So I am going to try to do the show tomorrow. The only time I have tomorrow to be able to do the show is between 8 and 9. So please tune in then. There is a slight possibility. You know, I'll make every effort to get in front of this microphone and then go back into bed afterwards or something. But I am going to try to record it. But if I'm really feeling lousy, it probably won't happen. But you're welcome. And I just learned at a young age, my dad kind of taught me, you're feeling sick, that's okay. Get up and go to work. You know, if you do that, he said, then when you feel good and you want to go out and play, no problem. In any event, he says, if there's time today, would you please look, we're going to do Fortinet, FTNT. My question is whether it is likely to go back and test the low from the week of October 31st within the next few weeks. And thank you, Merry Christmas. Same to you. So what we're looking at here is I'm just going to expand out the daily time frame chart because that's right now we're taking the most amount of information from. And what transpired yesterday out here was a test and rejection. So you're asking about the October 31st weekly swing point. Well, it turns out the day of November 3rd is that swing point low. Let me just take a look at it like this. I'm putting my cursor on the left-hand panel on October 31st. So that you can see, and each of these line up with the week and the month and so forth. So now you can see that was lining up right with that candle. So that low is the low that you're talking about. So just so that I don't want you to think that I'm not talking about that same low. What I'm doing here is now I'm breaking that weekly chart into the daily time frame. And the reason that we're doing that is because yesterday was a test and rejection of that swing point on a daily basis. The test and rejection of the swing point high, which was 47.34, which had volume of 17 million shares. And yesterday, that was tested with 6.8 million shares. So in the art of timing the trade, that's what we call a test and rejection of a swing point. And if you can't bust them to the downside, price should try to bust them to the upside. So take that for what it's worth, which is worth a lot. Now, what yesterday was also was a bullish hammer candle. So is price going to get back there? I can share with you that technically the answer would be we don't have a reason to suggest that it will. If it was going to get to that swing point low, you'd want to see instead price pushing lower with volume. And when I say with volume, you know, does it have to be the 17 million shares? Maybe it doesn't have to be, but it should be. but does it have to be? It doesn't have to be, but it should be more volume than what we saw yesterday, and likely more volume than what it is that we're going to see today. So if this is an option trade that you have because you're taking a look at 2 weeks out, here's how I would frame it. If you did get a close below yesterday's low, because there's an expression we like to use, and that is if you're long, you're wrong when you get a close below the bottom of a hammer candle. It's not exactly the rhyme there, but you kind of get it out there. If we get a close below yesterday's low, then I would say, okay, odds at least favor getting back to 44.18 or 45.78. And that's the bottom and center of its bullish structured weekly profile out there. That's unfortunate. That's the daily time frame chart. And I think the daily is really the one for us to really be paying attention to. Now, if I look at the weekly's back at support, the bottom of the profile, 48.97. The monthly profile support levels holding right now. And then yesterday you had a test rejection of that swing point out there. That's not the ideal setup to suggest that price is going to get back and test that low that you're looking at, that swing point that actually took place on November 3rd out there. So I hope that helps you out. I don't really see any additional information here that would help you. So we'll just simply move along. And thanks for your holiday wishes. And again, the same to you and your family. Hector and Patty write in. Hector writes in, he says, happy Thirsty Thursday. And I am a little thirsty. We're trying to impress our teacher. XLE in a 30-minute, you loaded up again on the XLE about an hour ago. How would you grade that purchase? Well, all right, so let's go take a look at the XLE. You said 30 minutes ago. I'm just going to use a 30-minute chart just for the moment. We're just going to keep our 30s equal. So you loaded up. So on a 30-minute chart out there, your teacher doesn't like it. And here's why I say that. At 2:30 yesterday afternoon, Hector and Patty, what the XLE generated or did was it formed a TD9 count top. And then it actually took hold before the close yesterday. We saw price moving lower. It did get a new profile. You probably would not have seen that, but you were getting important messages that price wanted to move lower. Now, the downside target would have been 85.21. That was the low of the TD9 count pattern. Price got through there and crushed through that. So is this something to load? So, and what we have right now, we do not have any kind of a bottom signal. We're below profile. We're below breakout support. We're below the oscillator and change line. I'm not sure where it's going. It's just simply below support. You had a bullish engulfing candle on that last bar, but that doesn't necessarily mean anything. It means something more when it's at the completion of a pattern. So first, with regard to a 30-minute time frame chart, we don't like that idea of a buy earlier this morning. If we look at the, let me change over now and go to the weekly, there are 3-panel set of charts out there. Let's go see what they're communicating to us. And, price right now is back below its red oscillator and change line. That's not a good scene. That tells us we have a falling price oscillator below zero. We're below profile support. So not ideal on a daily basis for the XLE. In fact, the XLE could easily be targeting 79.05 out there. Now, volume today inside of the XLE, probably pretty light on this pullback, and it is trading into a prior swing point. The prior swing point was from the trading session, Hector and Patty, of December 9th, where there were 24 million shares. Now, you've done 6 million shares so far in the first 2 hours of trading, so you're pulling back on lighter volume into that swing point, but you would need a close above 85.40 to reject that swing point, much like we took a look at with Fortinet. So we don't like on a daily basis that price is below 85.94, that red oscillator and change line. All right, what do we like? Got to find something that we like for Hector and Patty. Well, the thing that we would like is the mere fact that so far the top of that weekly profile is held, and that's at 83.53. So if you did get a close below that, that would not be a great outcome for you. What else can Stevie show Hector and Patty? So, yeah, what we'll do here, because we'll go take, there was a request inside the Tiger's Den to look at light sweet crude. So let's go do that now. I don't think there's anything else for me to report here, but we don't like that purchase. I think you know the reasons why out there. And let's go see if we can figure out what light sweet crude is going to do, because this could or should or might impact the direction of the XLE. So let's put up light sweet crude. We're still in the February contract out here. So let's get that fired up while, because it is Thirsty Thursday, Stevie needs a swig of water. There you go. So we can see light sweet crude trading Well, it's sort of unchanged for the day. So that's not impacting anything. And in light sweet crude, you actually have an A to B equals CD to the upside. Steve Rhodes with TFNN. I hear that music. We're going to go to a break, and we come back from this break here. We'll take a look at light sweet crude. We'll look at the daily A to B equals CD to the upside. That appears to be underway. Be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. Dow is down 525, S&P off 78. We're looking at light sweet crude, which has an A to B equals CD pattern to the upside. If that pattern is going to complete, price needs to close above today's high. Today's high is at 79.90. It doesn't have to close above it today, but it does need to close above it. The reason that Stevie says that is because on the 5-hour chart, you've got a confirmed TD9 count pattern. So that has completed, but price has also pulled back and it's found support at its green oscillator and change line on the top of that 5-hour profile at 77.76. So it has a neutral signal. A top, yes, but with price above resistance levels, it is a neutral signal. That's the only time frame really that, well, I take that back. You've got TD9 count bottoms for the 30 and the 10-minute time frame chart out there. So perhaps that is going to hold that 5-hour TD9 count pattern. Again, a close above the high of today's session would then trigger that A to B equals CD, which would give us a price projection around the $81 area is likely to be fulfilled. But it's not really impacting, it doesn't appear to be impacting your energy trade out there, Hector. The last instrument we're going to take a look at is for S&P inside the Tiger's Den. And this is for DocuSign, DOCU, which is pulling back this morning. Still remains above the top of its daily profile and above its green oscillator and change line. Its conditions are outright bullish. That would change with a close below 53.26. We don't have that as we speak right now. Price found support on the monthly time frame at 45.52. Rhodes momentum indicator bottom pattern on the weekly time frame. Price consolidating with inside its profile. That's between 44.65 and 59.78. So you've got a nice bottom pattern both on the daily and the weekly with price finding support at the TD9 count breakout level for the monthly. So DocuSign is absolutely trying to bottom out here. And as long as price S&P can remain above that 53.26 level out there, looks pretty good. If price gets back inside that, then we're bringing back the 44.65, 49.10 area into play out here. Lastly, with just a few seconds to go, we'll take a look at that 30-minute time frame chart. Key level to be watching here is going to be the Rhodes momentum indicator bar that formed on December 20th at 10 a.m. And that low there to watch is 52.07. Folks, stay tuned for great programming. Again, I'm going to make an attempt to record tomorrow's show between 8 and 9. Please join me then. Send me questions. And only if I'm just simply can't do it will I not be there. Have a terrific Thursday, folks, and we'll see you on Fantastic Friday. Take care.